Good morning, everybody. It's Wednesday, September 25th, and this is the AgYield War Room. Dan Dempsey, and I'll be moderating today's session. As always, if you've got any questions or comments, please feel free to drop us a line in the chat area, and we'll be sure to get to it during the show. Overnight markets here had December corn down 2 1/4 at 409.5. November soybeans were down 8 at 1034 1/4, and December Chicago wheat was down 1 3/4 at 576 1/4. This morning, the USDA had an export sales announcement of 180,000 metric tons of corn to Mexico for 24. Good morning, guys. We were talking before the show. The GFS got a little bit wetter here overnight for that October 5th through the 11th timeframe, which certainly would be a very welcomed event in South America as they are experiencing, and we've talked about a number of times, this incredible drought that they've been going through. So that's on everybody's mind. You still got kind of the follow through of the rate cuts and in China. So Dustin, maybe a few thoughts here this morning on things that you're looking at, and then we'll throw it around the room.
Yeah, I think the market's still worried about the river, still worried about we're just still getting into harvest. And we know that there's a lot of bushels that have been desired to be sold that haven't been sold yet. So I think that's what we ran into yesterday. Personally, it wasn't just, the changes on the geopolitical front. I do think that it's a little bit of a breath of relief for growers, and they see a 415 price after trading sub 4, that's what they get to sell into at harvest. And that's what we're feeling and seeing right now. Otherwise, things like Brazilian real was up sharply yesterday. The dollar index is still showing signs of weakness. We're still seeing overall commodity strength. So it's going to be an interesting month or two, I would say, for sure. I still think harvest pressure could be coming, though.
And Justin, I thought you had a couple of interesting comments on this proposed legislation for the 45Z tax credit that was announced there yesterday, and just how that would be, affect obviously the oil market and some of the products that we're crushing beans for.
Yeah, so it's encouraging. It's being pushed by a lot of different sides here. A lot of different lobbyist groups. Seems to be kind of bipartisan at this point. It's kind of silly, right? We're giving these huge subsidies to do these green initiatives, which we've talked about on the show several times, and then we're importing used cooking oil and these other feedstocks from China and other countries. So it's an obvious loophole that needs to be shut. Looking at last year, I think we imported well over 4.5 billion pounds of used cooking oil and other feedstocks. While we're building all these crush plants, we're making all these huge, billion-dollar investments. If it were to pass today, I think it'd be really bullish for soybean oil prices. We were trading almost 90 cents a pound at one point. I think so we were down under 40 cents a pound. So the funds have gotten massively short. We've taken soybean oil from this big world premium to a big discount. Premiums in Brazil for oil are 500 to 800 points in the positive. So we're competitive. We're under palm oil prices now. So certainly would be bullish for vegetable oil prices, maybe corn to some degree. But it's got to pass. So there's definitely a positive there. We'll see what happens with it.
Yeah, nice to see it being bipartisan too, that they can, if they get on the same page for this thing and not play games, because the guidance itself has been wanted for so long. I mean, everybody's kind of been up in the air with what this really means.
Well, it just doesn't make sense. It's the first time that you've had, not first time, but certainly one of the biggest occasions of both the oil industry and the ag industry kind of wanting the same thing. Doing a lot of joint investments, these huge things, and then they let something like that happen. And so it's kind of crazy that they've allowed it this long. The question will be too, is there any retroactive things, or, I know there's also investigations going into, some of the used cooking oil, those kind of things that have been brought in, were they actually used cooking oil? Was there some bad actors in that? Probably. So we'll see. I would think, just looking at world veg oils, things like that, I would say that we've probably put in a medium to even a long-term low, in some of those markets. So kind of some positives there. We've had two or three big crush plants that have recently opened up in the country. So crush capacity is going to continue to go up. Last month we had a really low crush number, which was a surprise. But in general, as you look, going forward, we're going to keep seeing records broken in crush, I think.
Yeah, and we we looked at it this morning too. So, grain workers went on strike up at Canada's largest port there, the Vancouver terminal. They last year, close to half of all the grain produced in Canada passed through the port. So certainly something to keep our eye on there. And then here in the States, you've got the dock workers, longshoremen association looking to strike kind of October 1st. So we talked a little bit about that yesterday too, Justin, just some of the ramifications of these port strikes that could take place, as we're progressing through harvest, and how that could, impact things as well.
Yeah. It's not good timing.
No.
As Dustin said, like the river levels are, I think, the fourth lowest in recorded history. We're getting into the gut slot of harvest here. Obviously, we've been going here for a couple of weeks, kind of picking at, but like we're really going to be ramping up here pretty quick. To Dustin's point, there's still a lot of bushels that need to be sold. We hit $1 rally from the lows yesterday in beans, had a good rally in corn. We definitely ran into hedge pressure. I mean, certainly our clients, we're hitting a lot of orders that have been working. So I think we just the market yesterday ran into a good chunk of hedging. So we've cleaned up a lot of the managed money short. Obviously they can flip and get long if there's fundamentals to drive it, but it's certainly a much cleaner, call it a cleaner balance sheet than it was certainly 30 or 45 days ago. So if we do run into hedge pressure, if things turn negative again, there's a lot of bullets, in my opinion, that could drive the market back lower.
Sure. Ben, what's on your mind this morning?
I think that all those things in the short term, the U.S. harvest is the big one that we have to get through. But I was on a call with a bank this morning that I work with, and it was a very pointed question about if Trump is elected, how will that impact grains? And I think that the general idea is that we are going to have a tremendous amount of narratives flying around in Q4, bullish, bearish, fundamentally heavily supplied versus wars, what's going to happen with an election, currencies, interest rates. And I think you have to be really careful about attaching yourself to any one narrative and thinking that 1 + 1 = 2. We've traded this range out in corn for a long time now. I think we're going on about 2.5 months. Beans will shift towards potentially a weather market in South America. So I think you have to be really careful with all of these little things that are out there that could turn into something big and think that they can equate to something that is logical and rational, because commodity markets can have a completely different view of whatever that narrative is. And we've used the examples before of Fukushima limit down, Chernobyl limit up, embargo, limit up 8 days in the early 70s and limit down in 2010. So I think you have to be really careful with price discovery to think that something has to happen the way the narrative plays out. I think we're going to be very volatile in Q4.
Well, even Ben, to that point, Trump recently talking about, one of the first calls he makes is to, China, and be like, where are you at on the phase 1 deal that we agreed to? Those are all things that you just don't, you just, like, to your point, the geopolitical risk, outside of just what the yields are, absolutely can change the markets dramatically.
I think Q4 is going to be volatile, and maybe that's wishful thinking on my part a little bit, but I think there's going to be a lot of a lot of turbulent winds and headlines and things that could affect all markets.
Well, it's interesting you mentioned that. I mean, December, if you look at like the markets, December, the way they're pricing it in on interest rates is another 75 basis point cut, so they're just getting in a real aggressive cutting type of mindset.
Well, a few months ago, it was only 25 basis points for the year.
Right.
And so we've already cut 50 and talking 75. So to Ben's point, how fast things change.
Yep, it's a great
Yeah,
point.
well, and the opposite, right? I mean, talk about Trump winning, but if Kamala wins, the further escalation of war with Russia, and and they're linked directly with China. So, I mean, you're talking volatility. You're talking kind of two different stories almost. Obviously, Trump's kind of trying to pull us away from World War III, and it seems like the other side wants to push us closer and closer to it, and escalate it more and more. So that seems like two different narratives, right? Like Trump coming in trying to shut down the war and trade one phase, the, like you said, the trade deal, or the opposite, right? Further separation of almost, China versus the U.S. What that would look like. So it's, not that I know, but just like you said, the volatility could be huge, and you really don't know which
Well,
way
I
to
would
go,
say
so.
too that we're not the only ones waiting on this election.
Mm-hmm.
Russia,
Yeah.
China. I mean, there's a lot of things that could change depending on who wins.
Yeah, I look at it as, we talk every year about the seasonality of uncertainty, and that's when that gives us our best opportunities. And I think the uncertainty over the next, until we get some clarity on these things, the uncertainty gets redlined into next year, whether it's a combination of South American weather, good or bad, geopolitical events, escalation of war, interest rates. We've got a lot of things that are could be positively, negatively, and all at the same time affected by the election outcome. So,
41 days. So, not that anybody's counting down, but
Yeah.
41 days. Good stuff, guys. Ryan, we got a couple minutes here. Keep trucking higher in cattle. Not much to speak on cash, and we got hogs and pigs tomorrow. So, what are your thoughts?
Yeah, absolutely. So yeah, new highs for the move. Everything looked like it was going pretty well right at the start. I mean, all the ags were up pretty good. All the commodity markets looked like they were surging on various news reports, but nonetheless, it seemed like we kind of slipped back in the front end of the market. So it looks like you just had a little bit of a tired trade. Like it feels like we're starting to get into some overbought territory, but everything's kind of firing on all cylinders. But yeah, we're waiting for cash to pick up. I think just there's a big question if this trajectory on the board is going to lead packers to pay up. Looked like the kill was revised in cattle. Looks like it was revised up to 115. So overall, it seems like we're starting to see those beef prices stabilize with this kind of lighter kill. But after that revision, things may change a little bit. So we'll see. We'll keep an eye on that. But big up in commitment in the meat. So we were up 7,300 contracts in the cattle. We were up another 550 or 5,500 contracts in the hogs. So we're seeing the investment community, I think, really start to ramp things up at these higher price levels. The hog and pig report coming up here tomorrow looks like all hogs expected at 100.4, breeding at 97.9, and market hogs at 100.7. There's going to be a lot of focus on that breeding herd number. I think in general that kind of will paint the narrative kind of in the longer term, and we know at least on the spec side of things they want to be long, stay long. It's just maybe that pigs per litter number gets kind of taken down. But at this point, from just the all hog number, looks like we have a pretty sizable amount of inventory right now. And overall, it would be the highest inventory numbers since September 2020 for a SEP1 report. So I think just from a supply standpoint, I don't think we're hindered by much. And the focus is really going to be likely on that breeding number. So we're going to stay a little cautious into the report. This is probably a really good opportunity just because we're right kind of near the highs. So probably a good idea to look at some protection just in case we start to see this thing slide or we get hit blindsided by just anything. Like you guys say, a lot of volatility in this Q4. I think it's good just to have maybe a couple extra layers of protection kind of going into this time. So we'll see how that all shakes up.
Ron, real quick too on the Chinese piece. I mean, if you got a bump in their economy and things like that, and it starts looking better, I mean, what's the overall global picture for hogs then in that scenario?
I mean, in terms of overall price direction, I think everybody sees any kind of stimulus right now as bullish. We just got rumblings of the very beginning of the pandemic, where, or at least after the shutdowns, when everything opened back up, everybody had money in their pocket, and you saw a massive surge in all these commodities. So I wouldn't be surprised to see that if we start to see, the Chinese economy really, that these stimulus programs will work. I think, overall they're trying to control this kind of deflation. So I think they'd rather have just rampant inflation than any kind of deflation at this point. So I probably wouldn't fight that.
Sure. No,
Yeah, it's
good
gonna be
stuff.
curious how that plays out, right? I mean, they're obviously doing these things because they are in trouble.
Yep.
They've got a demographic problem, all these things that we've talked about, and it'll be interesting to see how it works. It's hard to reverse 40 years of policy that's gone the other way.
Right.
As far as, just their growth, and, Jason talked about this, but just the change in culture too of, how they want to work, and, all these kind of things that they're just, another, case of communism. It's tough to control the whole populace and do what you want. So it'll be interesting to see what they can manage.
Especially in this day and age too. Communism, you could hide behind the no social medias and all that kind of stuff, but people see other things that maybe they didn't see in the past, and they're, I want that versus what I've got.
It's certainly getting harder. It's certainly getting harder to control. So
yeah, no doubt. Just came into the open here, guys. We got December corn down 1 3/4 pennies, 4.10 is the last. November soybeans down 7 at 10.35 1/4, and December Chicago wheat's up 2 now at 5.80 is the last there. Tomorrow morning we will have export sales out at 7:30 Central. We'll take a look at that report, talk about it in the war room. We appreciate everybody that tunes in on a daily basis. If you wouldn't mind, throw us a like or subscribe. Certainly helps us, and we'll keep you up to speed on everything that is going on here at AgYield, as well as show times and things that we're putting out there. So throw us a like or subscribe. Thanks for doing that. Every day that the markets are open, we're streaming live on X, Facebook Live, and YouTube Live, 8:15 Central. Appreciate the thoughts and comments here this morning, guys. It was a good conversation. Hope everybody has a great day, and we look forward to talking again tomorrow.
Thanks, Dan.
The War Room is proudly presented by AgYield. For over 50 years, the AgYield team has provided grain marketing and risk management solutions for growers across the country. Our veteran consultants harness cutting-edge technologies to pinpoint risk, optimize market performance, and protect your farm's profitability. Discover a new approach to farm revenue management at agyield.com.
Hey guys, Jack here. Be sure to support the show by hitting the like button, leaving us a comment, and subscribing to the channel for all the latest updates. Thanks for watching. We'll see you next time.